Welcome to Next Gen Finance. Today, I am going to ask you a very dangerous question because this question has the power to shift the whole mindset of how you see the UK economy right now. Ready? Here it is. If the latest data shows that the UK economy suddenly grew, then why does everything still feel expensive, stressful, and heavy for most people? Because yes, the new GDP figure shows a surprise growth. It shocked analysts, it shocked the market, it changed the whole narrative. But the big confusion is this. Is this actually the beginning of a real recovery, or just a temporary fake bounce that will disappear again? Stay with me till the end, because the difference between the two could completely influence your decisions, your planning, and even how you prepare for 2025 financially inside the UK. Let's start with the emotional side. If you ask an average person today, not an economist, not an analyst, not a banker, but a normal working UK resident, would they say economy is improving? Most people would say no. They still feel the pressure of high prices. Groceries feel expensive. Petrol feels expensive. Rent feels expensive. Interest rates still feel heavy. And this is the strange tension we are living in right now. On paper, the number looks good. In reality, wallets don't feel good. So this gap between paper reality and emotional reality is exactly where the truth hides. So what actually happened in the data? The economy expanded slightly. It wasn't a massive boom, it wasn't explosive growth, but it was still positive. The real surprise is that analysts expected weakness or stagnation. They expected low spending, cautious behavior, and limited output. And yet, against these expectations, the economy managed to grow. That is why this is called a surprise growth. But the question is not whether the number is positive. The question is how sustainable that positive number is. There are three possibilities when this type of surprise growth appears. The first possibility is that this is the early stage of a true recovery, the early signs that confidence is returning, spending is stabilizing, and demand is building up. The second possibility is that this is simply a result of small temporary boosts, like seasonal spending, one-time orders, or short-term demand spikes. The third possibility is that this is a statistical noise or revision-based jump which doesn't reflect real underlying strength. So which one is it? To know that, we have to look deeper. Let's talk about the behavior of consumers, because in the UK, consumption is the heart of the economy. If people spend more, GDP grows. If people spend less, GDP slows. One big factor recently is that many people are spending not because they are financially relaxed, but because they don't want to postpone purchases. Sometimes people spend from credit cards. Sometimes people buy because they fear next month might get even more expensive. This creates short-term boosts, but long-term fragility. So yes, spending increased enough to show growth, but it doesn't automatically mean people suddenly became financially comfortable. Now let's look at businesses. Are businesses hiring more aggressively? Are small companies investing more? Are big corporations expanding capacity? Not really. Most companies are still cautious. They are waiting for interest rate cuts. They want more certainty before making big moves. When businesses play defensive, the growth stays weak. The economy needs investment confidence, not just consumer spending. And that confidence hasn't fully returned yet. The Bank of England is also a major player in this story, because if the economy shows strength, then the bank may delay cutting interest rates. They could say that inflation risk still exists and the economy doesn't need immediate support. And that decision could slow down growth later. So ironically, a positive growth number could become a negative result for borrowers if it delays rate cuts. This is why one good month of GDP can be misleading. Now let's talk about inflation. Inflation has come down compared to the peak, but prices are still high. The pain didn't go away, it only slowed. The cost of living crisis didn't magically disappear, it just softened slightly. Most people still feel like their money doesn't stretch far. You feel it in your shopping basket. You feel it in your monthly bills. And if wages don't grow faster than prices, then recovery is not real. It becomes a paper illusion. So what would prove real recovery? Real recovery means lower borrowing costs. It means stronger wages. It means cheaper mortgages. It means rising business confidence. It means more investment money entering the system. It means inflation under full control. And honestly, we are not there yet. We might be moving in that direction slowly, but we are not at that destination today. So where does this leave us? If the next 3 to 4 months continue to show consistent strength, then yes, we can say this was the beginning of a real recovery. But if the data drops again next month, then this entire surprise growth headline was nothing more than a short-term fake bounce. Because 1 month of good news doesn't overwrite 1 year of pressure. People want to believe that recovery has started. Everyone is tired of stress. Everyone wants some positive news. But real recovery is not about hope, it's about trend. When the trend lasts multiple months, then belief becomes reality. Until then, caution is smart. So my final question to you is simple. Does your life feel easier? Do you feel like the pressure is reducing? Because your own wallet is the most honest economic indicator. Numbers can trick you. Headlines can excite you. But your daily life always tells the real story. Tell me in the comments, in your opinion, is this the start of a real recovery, or is this just a temporary bounce before another slowdown? And if you found value in this breakdown, make sure you subscribe to Next Gen Finance, because we explain the UK economy the way it actually feels, not just the way headlines want you to think. Thanks for watching, and I will see you in the next update.